With all the absolute craziness that's been happening around the world and of course in the stock market as of recently, and that's probably going to keep on happening for some while now, there could potentially be some massive buying opportunities once again, even some once in a decade opportunities, but that's of course if we play our cards right. Now, because I think there might be some major opportunity in the market, especially in the month of February, I want to go through and make a special video for you guys and share with you all my February watch list, every single stock and or ETF more or less that I'm trying to get my hands on more and more shares. Now, just because I want some of these names don't necessarily mean that they're the right positions for you guys, but I'm going to go through every single name on my personal watch list for the month of February in a stock market environment that's going to be volatile to say the least. So if you want to see my entire watch list for the month of February, then make sure to stick around, drop a like down below, and let's get right into it. Real quick before we get started with this video, make sure to head over to weeklyetfs.com and grab my brand new ebook teaching you guys everything you need to know not only about dividend income investing, but specifically why weekly paying ETFs could be the ticket to financial freedom much sooner than traditional methods. Again, that's weeklyetfs.com. It's the first link down below in my description. Now, the first ETF that's going to be on my watch list in the month of February, but honestly pretty much every single month that is of course SCHD, or the Schwab US Dividend Equity ETF, which I've been buying now for several years. Now I'm buying this ETF like crazy to basically build out a massive foundational position, as a lot of you guys already know, that's hopefully going to pay me more and more in dividend income over time. Now, this ETF has done that over the past several years, and even though that's not necessarily certain that this ETF is going to continue to pay more and more dividend, I personally am betting on it. Now, if we see a dip in the market where SCHD gets below my cost basis, which is still sort of far away, that'd be an opportunity for me as a long-term investor to, of course, dollar cost average down, grab some more shares at a better price, and of course, get a better yield on cost. But speaking of that, yield on cost is very important, especially in the context of the market that we're currently living in, where things are volatile. Buying different names at a higher starting yield on cost can definitely make or break certain positions. So definitely do your research and figure out which stocks and ETFs could be on sale very soon. The next ETF that's on my watch list is another one that I've been trying to get a larger and larger position of over the past several months, and another foundational ETF that I already own well over 1,000 shares of. I'm talking about Devo, or the Amplify CWP Enhanced Dividend Income ETF, which we've talked about many times on this channel. Now, Devo basically buys into a small basket of holdings, writes cover calls and individual names, and because of doing so, Devo offers almost a 5% starting yield, but also has some downside protection, and it's pretty low on the volatility scale. Devo's another one that would be amazing to grab and gobble up some more shares if, of course, it drops below my cost basis, which once again, we're pretty far off. But Devo's on the watch list for the entire month of February, and I'm going to be grabbing more shares even if Devo still stays up where it is. Now, to get into some higher yielding names, I definitely want to grab some more jepi, the JP Morgan Nasdaq Equity Premium Income ETF in the month of February. I made it pretty clear a while ago that I do want to build out my jepi position even larger, and that's with already having several hundreds of shares. Now, jepi over time has paid consistent dividends every single month, more or less, and even though there are some ETFs out there that pay larger yields and have maybe the same amount of upside potential, jepi is still sort of the king of premium income ETFs, at least if you ask me. Now, because jepi is currently sitting well above my cost basis, this is another one that would sort of be a treat, especially as a long-term holding, if of course we see jepi drop down below, maybe a few bucks per share. But speaking of higher yield, especially if we get some more market turbulence and if the Nasdaq 100 drops significantly, we could see names like qyld, the NEOS Nasdaq 100 high income ETF, go on sale also. Now, this ETF has been in my portfolio for a while now, and I've been trying to actively grab more shares of this one to build up a large position of, just because I like what this ETF does. I've talked about it multiple different times, and because of course, a few shares of this ETF alone can raise your total monthly dividend income significantly. Now, that's because this ETF pays monthly, and of course the distribution rate is around 14%. So if of course we see a big drop in the Nasdaq, we're probably going to be seeing this one on sale also. Now, another NEOS ETF that I'm also going to be watching and probably buying some shares of, whether or not the market drops from here, is more SPYI, the NEOS S&P 500 high income ETF, which offers S&P 500 index exposure, but of course with the data-driven call option strategy, this ETF offers a boatload of income from day one. We're talking around a 12% distribution rate paid out monthly. This ETF is a massive position in my personal portfolio. I think I'm closing in on almost 1,000 shares across the board. Now, even though I already have a ton of SPYI, just as of recently, I did announce to you guys, in case you guys are interested, that I am planning on buying even more shares of this one in 2025, even though last year I kind of said that my position was closed. But this is another one that would be amazing to buy lower than my cost basis to dollar cost average down, because I'm going to be honest with you guys, a lot of these different names that I've been buying as of recent, I have not been able to dollar cost average down. I've been actually raising my cost basis. So if we see some volatility in the market, if we see some deals, SPYI is on my watch list also. A single stock that I have my eyes on, especially if we see some massive market volatility, is Realty Income, ticker symbol low. I know some of you guys might think I'm crazy that I'm still buying some shares of Realty Income here, because a lot of you guys have pretty much written off commercial real estate for dead, even though Realty Income is, in my opinion, one of the best to do it. Now, just as of recently, I grabbed 100 more shares of Realty Income for my portfolio, which I'm going to be talking about in a video very soon here. But keep in mind, for my personal portfolio, I also write calls on a lot of my shares of Realty Income, so it's not necessarily like I'm fully exposed to the market. So Realty Income is another one that if it gets low enough, I'll probably grab a few more shares here and there. I'm not necessarily trying to make my Realty Income position much larger from here, because I already have almost 3,000 shares. But that being said, Realty Income, without a doubt, is still on my watch list. Another monthly payer that's on my watch list is Main Street Capital, another single stock that I would be really lucky to grab some shares of below my cost basis. Now, Main Street Capital is another single stock that's performed very well over the past several years, and although I've been wanting to add to the position, I haven't really been able to just because it's gotten very expensive. But with that being said, Main Street Capital, like I said, is on my watch list, and if we are lucky enough to grab some Main Street Capital at some of the prices it used to be trading at back in the day, that'd be amazing. Another single stock that I do have my eyes on that I do want to add to my position, I have a small position of it as of right now, but PepsiCo. Now, this is one of my favorite dividend growth names because it has grown over time pretty significantly, although ever since about 2023, it's been slowly dropping down into the right. Now, over the past several decades, Pepsi stock has done amazing. And I personally do think that if it gets down to a certain point, there's going to be some massive upside, of course, along with that massive dividend growth. So because of those reasons, this is on my watch list, but Pepsi would probably have to get a lot cheaper if I'm going to add some. A few more names that are on my watch list: QDTE, the Innovation 100, 0 DTE Cover Call Strategy ETF, the weekly pain ETF that I'm sure a lot of you guys either own or have looked into by now. This ETF has been on my watch list. I do own a few shares of it, a very small position, and I'm pretty much buying some shares of this one here and there as more or less of a gamble, just because it's sort of unknown exactly what this ETF is going to distribute on a weekly basis, and if this ETF is going to decay over time, in my opinion. But again, so far the total return for QDTE has been positive, and this ETF has been very fun to not only watch, but now even get paid every single week. So if this one drops in price low enough, I will definitely grab some more shares and try to build out a position as cheap as possible. Now, one of the last but not least names that I'm going to be watching and or buying more if the market dips significantly is FEPI, the Rexfang Innovation Equity Premium Income ETF that basically buys into big tech names, writes covered calls, and then because of that offers massive enhanced income potential. Now, this ETF is full of big tech names, so there is going to be the risk with this ETF dropping significantly if we see a massive drop in those names. So we got to be ready for whatever. That if FEPI drops low enough, dollar cost averaging down is something that I'll probably be doing in my portfolio just because I already own some shares of FEPI. It pays a massive amount of income every month, and so far it's been somewhat stable, but we're going to have to wait and see. So that's more or less my watch list and different stocks and ETFs that I'm planning on buying in the month of February and beyond. Some of the names are more important than others, of course, and some of the names I'm a little bit more serious than others. And just because I talked about those names once again, don't necessarily mean that they're going to go up in price or anything of the sorts. But now that I share with you guys my special February watch list, because again, I think there's going to be some massive volatility this month, I lastly, most importantly, have a question for you down below. What are some of the top names, stocks, or ETFs on your watch list for the month of February? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.